Good morning. This is Dylan Jovine with Behind the Markets. Happy Tuesday. Today's Tuesday, March 10th. Last week, we talked about being in a risk-off kind of mode. Now we know why the market has sold off. And the primary driver of this sell-off and volatility generally is the price of oil. The price of oil breaks above 110 bucks a barrel. Basically, what that does is it creates inflation. It raises the inflation expectation from about 3%, which is already high. It's above the Fed's 2% target. Raises it from about 3% to 3.2 or 3.5%, depending upon the estimate, the analyst that you're looking at. And what that does is it causes drag on the economy. If you think about the economy like an airplane, basically, it's like adding ice to the wings or adding weight, cargo. Just makes it harder to fly, which really people have less money to spend. People have less money to build out projects. Takes a lot of energy to do that. Very, very expensive stuff. So we've seen, and it's not as powerful as interest rates, the effect oil has on the economy, the price of oil, but it is second place for sure. Energy, it's the whole thing, right? You can't really do anything without energy. So the risk off, you see why we've had a risk off. And look, we've been here before. Those of you guys who've been with me since 2018 know the thing that makes us special is we don't hide under our desk when things get tough. We don't panic. We keep our cool. We let everybody else in the market start to lose their cool. We take advantage of that. That's what 35 years of being in this business has taught me. And remember, we break things into two columns. Things we can control, things we cannot control. And in the column of things we cannot control, we can't control the stock market, can't control price of oil, can't control Iran, can't control any of the market, can't control any of it, interest rates, inflation. We cannot control anything. All we can do in column one is control how we react to all these things. And what we're going to do is we're going to keep our cool, just like we did in 2018 when they were raising rates, just like we did in 2022 with the inflation spiral to 9%, just like we did in Liberation Day tariffs, you name it. That's what we do. We keep our cool. In the things that we can control department, we have 4 steps. Again, those of you who've been around for a while know we have 4 steps for markets like this. I'm going to briefly go over them. You can get them in detail at Takeover Targets in the Midnight in America report. Step 1, sell your most speculative stocks and funds. This is the playbook here. And again, how do we define speculative? Basically, the most speculative are the things that just don't earn money consistently. They're really dangerous. They're the things that you look at your portfolio and you go, what am I holding this for? These are good times to sell that. And again, remember the story of the market is starting to change. Before it was a growth story. It was an AI story. Now it's a war story. It's also the economy might not be as strong story with the jobs report. So the story is starting to change. And if the master narrative, if the master story that's been driving the market higher changes, that means the direction of the market's going to change. So the question is, does it change sideways? Does it change down? Or does it find a new story? Does it absorb all these facts and find a new narrative to push it higher? So anyway, step 1, sell your most speculative stocks. You can't keep your cool if you're panicking. So you got to get rid of the stuff that is riskiest and craziest, the stuff you only buy when things are going great. Step 2, take all that money, do what I do, invest it in short-term treasury funds, basically. And I have a couple here for you. And basically, you don't want to invest in just any government mutual funds. The safest funds are those that invest in short-term U.S. government securities, like T-bills, basically. And I have a couple for you here. The Vanguard Federal Money Market Fund is a good one. The symbol there is V as in Victor, M as in Mary, F as in Frank, XX. So those are good ones. Step 3, prepare a shopping list of stocks. Okay, so you've been sitting there for years and years and years, and you've watched all these stocks take off. If this market sells off, the good thing about that is you get a mulligan. You get to buy all these stocks you've been looking at that you missed out on. You get to buy them cheap, which is a whole lot of fun. And that is really what you do with that money. Again, number 1, you sold your speculative stuff. Number two, you put the money in short-term treasury money market mutual funds like the Vanguard one I talked about. Number three, you get a little shopping list of stocks, companies that you've watched their share price go up over the years, but you never really owned them. And you said to yourself, good Lord, if I had a chance to buy that stock at so-and-so price, I would load up. Guess what? If this market actually cracks, you might get that chance. So you prepare your shopping list, and then step four, get ready to pounce. The great thing about a market crash, if it goes there, is that you don't have to be a financial wizard or Warren Buffett to make great money. You just have to be mentally and financially prepared. You just have to have some cash, get rid of your speculative stuff, stop panicking, raise some cash, put it in short-term treasury money market funds, and then three, have a shopping list of stocks so you're ready. You're like a hunter. You're just ready for this thing. And if the market really sells off, you'll get an opportunity to buy some companies that are really great at really cheap prices. Now, we are not there yet. We don't know. This story could change quickly. If Trump backs away, if he changes his mind, et cetera, the Iran war suddenly, quote unquote, stops, which is possible. Or Iran moves to phase two, which is asymmetric warfare, which is what they're doing. And a lot of fancy big explosions that'll terrorize people, but that probably won't have much strategic effect. Anyway, get ready. Look, we've got to keep our cool. That's the one advantage we have over the panicking masses. So I hope that you take this video or go to Takeover Targets, look up our Midnight in America report, and see exactly, step by step, in great detail, how to play a market like this. Anyway, that's all I have for you today. Have a wonderful day. I'll see you tomorrow.